What is going on, everyone? I hope you're ready for an eventful end to the week because that's what's coming. Good news is bad news right now, as all three indexes pulled back today for the third straight day, which is something that hasn't happened since March 28th, which was just a few days before the Liberation Day sell-off. The biggest event of the week will happen tomorrow morning. A lot of people are overlooking this. In today's video, we cover everything you need to know to end this week strongly, and we're not wasting any time either. Tom, let's get right to it.
As we can tell, the SPY continued to slide off again today. In pre-market, the SPY broke through key support ranges from yesterday and ended up touching around 655 support from today, where it double bottomed. Tomorrow morning is going to be the big day of the week, so stick with us. We'll be talking about the PCE data in just a second, but what really sent the market down today? Really, right now, like you said, Mike, good news is bad news. Jobless claims tumbled to 218,000, well below estimates, despite fears of labor market weakness. Also, GDP came in and didn't really surprise investors either there. So at the end of the day, this data wasn't too bad, but it ends up pushing the Feds closer to pause rather than rate cut at the next meeting. That's ultimately why the market dropped today. But what is going on tomorrow? It is the PCE price index and personal income and personal spending data that is releasing 1 hour before the market opens. If you did not know, this is actually the Federal Reserve's preferred inflation gauge. Now, in the past, whenever PCE data releases have happened, especially the closest to releases, we can tell that there were 2 days of selling pressure that ended up coming into play here. Mike, this is pretty concerning. On the last reading on August 29th, we saw a pretty big red move out of the market. Another red day following it the next Monday. On the previous reading before that, on July 31st, again, a lot of selling pressure in the market. And then again on August 1st, followed up with even more selling.
Yeah, and both of these instances came in right at expectations. So heading into tomorrow, I would definitely say the odds are kind of against the market in the sense that, the past couple readings have been decent and the market has been selling them off pretty hard. The market itself is also just pretty weak right now. So Tom, when we look at the market right now, heading into tomorrow's PCE data release, what are you seeing as key levels and what's on your radar?
Whenever I'm looking at the SPY, the most crucial level is going to be that 654.40 to 655 support. Like I said, we essentially double bottomed there today. The first bounce happened at 655 earlier on in the morning, and the second bounce came in later in the day at that 654.40 mark. Now, if you're wondering, Tom, why is 654.40 so significant? Well, that is actually the low from the last FOMC meeting whenever we had that volatile drop and then pop back to the upside. That was the candlestick that extended all the way down to there. So it's pretty insane to see the SPY make that bounce, and it will be a very big level to break below tomorrow. But if we do see it break, especially in pre-market with the PCE data reading, then I think we could see significant selling pressure. Something I wanted to do, Mike, is actually go back and compare the previous readings to the SPY now. We can see that on the previous reading, the initial reaction was very minute. But once the market opened, that's where the real selling came into play. And even on the reading before that, it was the same story. Most of the selling started happening once the market actually opened. Hopefully that's the case again tomorrow so that we can take really good advantage of SPY possibly breaking down below there. As resistance, today the SPY broke under key supports right around 659.50 to 660, which are going to be key resistance now.
Good stuff. And yeah, great point with, pointing out how, a lot of the movement, at least over these past two readings, has happened when the market's open. And I think that's a great thing for, all the traders out there because most people aren't trading in pre-market. So yeah, definitely keep a close eye on the moves tomorrow, especially right after open. And another thing to keep in mind is that, Tom, we're in the hot zone right now. As we can see, we are in one of the most vulnerable periods of the year.
Yes, September is one of the worst months, and specifically at the end of September is where we see a lot of the selling pressure happen. And we can really see that in this box from like September 20th all the way to the 31st. There is a lot of negativity and a lot of negative readings on this historical data. So keep this in mind as we go forward through the next few days. Do not be caught off guard if we do see some selling pressure. Maybe look at opportunities out there with VIX, UVXY, put opportunities, and just be willing to adapt ultimately in the short term. Mike, I know that the market has been very hot here in the short term, and I know that we keep talking about the Jewish holidays playing a role as well. We're still in that 9-day period between Rosh Hashanah and Yom Kippur. So this is going to be a big thing to keep in mind as well, just in case we see added selling pressure from this. But Mike, I know that the market's been pretty hot lately, and it's actually been so hot that we've went 37 sessions without a decline of at least 1%. This is the longest streak over the past year. And we can see that on this table here, whenever we generally get to this point on the chart, we start to see a 1% sell-off come into play, right? Once you hit that 35 to 36 reading, there's not many circumstances that go past it, besides for the historic 2024 run and then some good moves in 23.
Yeah, like this data's bittersweet because it's great to see the market just like rip up so much, but at the same time, like you also, want those big pullback days because it just makes for a healthier market. And then also when you do see those like, bigger pullback days, there's a lot of like a bearish opportunity that comes along with that in a shorter term sense. So personally, I look at this data as like, is like exciting. I think going forward, like you mentioned, let's keep a close eye on VIX and even just like general downside opportunities where if we do continue to see more weakness in the market, not only can it open up like, short-term bearish opportunities, but for all like the longer-term bulls out there, it can also open up like a lot of good opportunities for dip buys, especially for people who missed out on a lot of this giant run-up so far this year.
Yeah, the run-up has been great. And, if we go back and we look at the pullback during April, that created a really good buying opportunity, like you're saying. So if we do see a short-term pullback, don't get too scared and don't get too fearful in the market, of course. Be ready to average in and be ready maybe to pick up and scoop up some companies that might be coming at a bit of a discount. Mike, whenever I start to talk about, downside action in the market, I'm starting to get a bit scared that we're going to get a black swan event maybe coming out of Russia here sometime soon. I've been seeing a ton of headlines come through with Russia ever since September 19th, where 3 Russian MiGs violated Estonian airspace, and I just keep seeing increased activity about Russian jets, even possibilities of NATO members threatening to even shoot down some of these jets. So there's been some pretty insane things going on with Russia, and it's just something to keep in the back of your mind and something to keep on the radar just in case this adds more fuel to the fire.
Exactly. Like, we don't want to see things like this escalate. We basically summarize everything that has happened over like the past few days so you can, read through it as much as you want. But what I do take is like a very important sign is, if we look at what the markets are saying, Tom, and we look specifically at oil, it has been rallying a decent amount, especially over these past few days. And a lot of people are, pointing at these recent Russia escalations for this. Crude oil prices have increased quite a bit over this week. And, what that is essentially showing is, people are positioning where if we do see more escalations, more, airspace incursions from Russia, and let's say one of their jets, does get shot down, that can definitely heat things up quite a bit, and people are buying oil ahead of time for that. And of course, if we did see a meaningful escalation, you already know that would have a big impact on the S&P 500's volatility as well. So there's nothing like too actionable from this news as of right now. But again, as traders, we have to look forward and, read the situation as it's playing out. So we definitely wanted to showcase this.
Exactly. We're not trying to be fear mongers out there. It's just something that you have to watch for because, as we know, war escalations have moved the market time and time again, especially in the short term. There could be some crazy movement if something does end up occurring. But Mike, whenever we look at the S&P 500, it is historically expensive. And if we look at 20 valuation metrics, we are actually above average on 19 out of 20. That's a pretty insane thing to say. Even if we just look at like trailing PE, it's 71% above the average. The Schiller PE, 115% above the average. And I think that what this really just goes to show is, look, the market is very overextended and a lot of stocks are just overvalued in general right now. So just don't be too scared if we do see some short-term pullbacks. And again, if things start to come back to average, that could create some good buying opportunities for the longer term.
Definitely. And then looking at more specifically tomorrow's lineup, we can see earnings is basically all clear. So the PCE data is the main thing to pay attention to. So let's get right into the fun stuff, which are some setups and predictions. And a stock that is definitely on my radar is XLE, and it is to the upside. Basically, just like we were talking about with this Russia situation, XLE is an ETF that follows the energy industry, and we can see it has been running up a good amount over the past few days. If we see any more developments overnight or, throughout tomorrow's trading day where we see, the situation with Russia escalate, that should positively impact XLE, especially considering, how much it's already been moving up over the past week. This stock is definitely on my bullish radar. Understand, the thesis driving it is a, geopolitical event. The more that escalates, the better this setup will do.
Yeah, it's a pretty big event going on with Russia right now. And whenever I think of oil and oil stocks, XLE is one of the better funds or ETFs out there that I really like to watch. It was up 0.9% today, which is nice. And, something else that's cool about oil is it has weak correlation to the SPY. So, hey, if the SPY goes down, we don't necessarily have to worry about it dragging oil to the downside either, which is definitely a good thing in my book. With my first setup, I'm looking at Intel to the upside again. Intel surprised today, even with the market red. Intel continued to blast and ended up closing up 8.8%. That is quite the move off of yesterday's news about them approaching Apple. There was even more news that came out today. The Wall Street Journal reported that Intel had also approached Taiwan Semiconductors about investments or manufacturing partnerships. So seems like Lip Bhutan and Intel are definitely still getting things done, Mike. And as I watch this stock rise, it is getting parabolic. Today, it actually broke through its recent high and started running up to some pretty insane levels. I will be watching for a break above the high of day tomorrow for a continuation, but my gosh, Intel is starting to get some serious hype behind it.
And shout out to you, Tom, because you were early to this setup, even from one of the first few videos of the week. So shout out to you. I love to see Intel rip like this. Another stock that is definitely close on watch is Robinhood, and it is to the downside. This is one of those stocks that has been crushing it. Their company's been growing a ton. It's great to see, but their stock is overextended, and it's a little bit vulnerable right now, considering this hard rejection off that 130 resistance and the increased acceleration of the short-term selling that we're seeing right now. We can see it's already down to that 122.30 level, and we're just seeing weakening price action here. I really like the risk reward playing this one to the downside. Looking at Hood more specifically, maybe in the worst case scenario, Robinhood gets back above that 126 level, and in that case, this bearish setup would just lose. But in the event we do see a continued sell-off, I would not be surprised to see this get back to that 107 level or even lower, depending on how the momentum plays out. Either way, Robinhood is on my bearish radar.
Yeah, Robinhood has had a lot of volatility, and it is pretty overextended, especially if we look at it from the April lows. So I will be watching it very closely as well, Mike. With my next setup, I'm also looking at a downside move out of Strategy, MSTR. So Strategy ended up closing down 7% today. We can see how much the sell-off started accelerating, and if we go to the daily chart, we can see it's starting to break through some very key support levels. Like today, it broke through 320, which was a recent low. That was a good breakdown. And then today, and even at the end of the day here, it's straddling $300. For tomorrow, I think we really need to see a good move back below 300. If we can get and hold below there, I'll be watching for a 290 breakdown just at the low of day today. You could maybe even play a $300 breakdown towards that 290 low there. But if we go to the Bookmap and go to the X-ray vision, I'm watching 300 so close because that was a massive buy wall. And once that gave out today, we had like an 8-point drop to the downside. And we can see another buy wall at that 290 mark. So if we really get that 290 breakdown, I think there could be some good continuations to the downside and possible put opportunities to play. But of course, shout out to Bookmap for the X-ray vision as always.
There we go. All right, well, it's now about that time for today's momentum plays. And with the first one, we have MP Materials, ticker symbol MP, to the upside.
Yeah, I don't know how we couldn't mention this one today. Another 8% mover, and at the high, it was up a lot more. If it can break out above 82.25, then watch it up.
With the next one, we have NewScale Power, ticker symbol SMR, to the downside.
Yeah, we were watching this one down yesterday. It actually fell below there in pre-market, bounced right up, and then it bounced off of our level that we were watching again for a possible entry back. For tomorrow, if they can break down under 36.20 at the low of day, then watch it down once again.
And then with the last one, we have Affirm, ticker symbol AFRM, also to the downside.
Yeah, Firm had a nasty drop today, 4.4%, and I like the way that it put a lot of selling pressure on its low of day at the end of the day today. So if we break just under that low of day at 77.50, watch for a downside continuation.
Boom. So keep these three stocks on the radar for potential continuations tomorrow, if and only if they break through the levels listed. But as always, how you trade is much, much more important than what you trade. Setups come and go. Focus on making smart, long-term oriented trading decisions. If you need help with this, you can learn for free in the Key Lessons channel of the StockedUp Discord. No matter what, always prioritize protecting your capital above anything else. So keep that in mind, and without getting too deep into that stuff, Tom, let's jump right into today's $2.1 million big money trade. And we are looking at ticker symbol XOM, ExxonMobil, and more specifically the 115 strike call options that expire on September 18th of 2026. So this is a very interesting setup. Number one, ExxonMobil, as I'm sure many of us already know, is in the energy sector. And like we've pointed out a handful of times so far this video, we are seeing oil prices rise because of what's going on with Russia right now. These call options are at the money. They have around a year's worth of time, and it's a pretty heavy trade too, coming in at $2.1 million. ExxonMobil has been uptrending pretty well over the past few months, and even especially like the past few weeks, and it is approaching resistance right around this like 116 area. I think this is a very interesting setup for all of those who are willing to give this trade the time it needs. You know, if someone's looking to, flip these contracts tomorrow, then that's not exactly what the trader here is doing. But if you're willing to give it time, very interesting setup.
I will say, even though the big money trader here isn't flipping the contracts tomorrow, it does seem enticing with the way that oil's been moving and the way ZOM was moving today. But yes, if you follow the big money trader here, you're going to have to give it some time, at least a couple to a few months, I would say. And obviously, we can always look at it. If you guys want updates, you guys can join the Discord and ask, or, even if you're in the trading floor, we have some cool features with commands to check if the big money traders are still in or not. But I think it's a very interesting setup, Mike. I love the 116 resistance here on ZOM, and it's been coming up and testing this multiple times lately. And I thought that on this specific test right here, we recently rejected, and then now we're right back up already testing it within a few days. It's not like it took a few weeks or anything like that. It's actually one of the quicker retests of the entire setup here. So I will be watching this one like a hawk for a potential breakout. For those of you that aren't in the big money trade yet with ZOM, tomorrow morning, if we start to rip above 116, that could be an amazing entry opportunity.
Definitely. So let's keep a close eye on this one. I think it's a very interesting setup. And Tom, let's also give a giant shout out to today's member of the day, Storm Zeus in the StockedUp Discord, who had some beautiful profits with some SPY put options today. So huge shout out to you. It's great to see posts like this one, and keep on rolling. If you guys are new to the Stocked Up YouTube, welcome, and definitely consider subscribing. We post brand new videos every single day where we do hours worth of research to cover the most important news, information, chart setups, SPY levels and analysis, key economic events, and basically everything you need to know about the stock market and more. We post all the time, and if you subscribe, you'll get our videos recommended to you more often. We're set for a very exciting day tomorrow with that PCE data that will release 1 hour before the market opens, so definitely keep your eyes open for that. And also, if you are a short-term trader, definitely check out Bookmap, as we like to call X-ray vision on the channel a lot. Basically, you can see exactly where key buyers and sellers are stacked up, which oftentimes act as great support and resistance levels. And Bookmap has so many features where if we explained everything, it would be quite a long video. But either way, it is a great software to have on your side. You can see basically all the key pivotal levels, and you can save quite a bit if you use the link down below, so definitely check that out. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.